Have you ever noticed how two people can earn the exact same income, live in the same city, have the same job, and yet one of them seems to glide through life financially, while the other feels constantly stuck? Same salary, same effort, completely different options. One gets approved for a car at 5% interest. The other gets quoted 19% and is told that's the best we can do. One rents a decent apartment with no hassle. The other gets asked for 3 months deposit, a guarantor, and still hears, "We'll let you know." One qualifies for opportunities that quietly move their life forward. The other keeps hitting invisible walls. And here's the uncomfortable part. It's probably not your income. It's probably not your intelligence. It's probably not even your work ethic. It's a 3-digit number that most people barely understand, but that quietly decides what kind of life you're allowed to live. Okay, yeah, that's literally you, isn't it? My name's Tanvir, and I spend way too much time thinking about how money actually controls our lives in ways no one explains clearly. And if you're someone who earns money, pays bills, tries to do the right things, but still feels financially boxed in for reasons you can't quite explain, hit subscribe and give this video a thumbs up, because this one might change how you see the entire system. Here's the thing. Most people think credit scores are about being good or bad with money, like it's some moral report card. Pay your bills on time, you're responsible. Miss a few payments, you're careless. That's not what a credit score really is. A credit score is a behavioral prediction tool. It's not measuring how smart you are with money, it's measuring how predictable you are. Now look, banks don't actually care if you're financially healthy. They care if you're financially reliable, and those two things are very different. Someone living paycheck to paycheck with perfect on-time payments can have a higher score than someone with savings who occasionally ignores credit products. That should already feel weird, because what this system rewards isn't financial stability, it's compliance. Here's what most people don't realize. Your credit score doesn't just affect loans, it shapes your choices long before money ever changes hands. Where you can live, how much your car costs, what jobs you can apply for, even how much mental energy you spend worrying about money. This is where it gets interesting. Let's talk about housing. Imagine two people looking at the same $1,200 apartment. Person A has a strong credit score, person B has a weak one. Person A puts down 1 month's rent and moves in. Person B is asked for first month, last month, and a security deposit. That's $3,600 up front. Same apartment, same rent, but one person has to freeze 3 months of cash just to exist. Now you might be thinking, okay, but that's fair. The landlord wants protection. Sure, but zoom out. That extra $2,400 isn't just money, it's opportunity cost. That could have been an emergency fund, debt payoff, a small investment, breathing room. Instead, it's locked up because of a number created by an algorithm. And this pattern repeats everywhere. Car loans. Let's do some math. You finance a $25,000 car over 5 years. With excellent credit, you might get a 5% interest rate. Monthly payment, about $472. Total interest paid, roughly $3,300. With poor credit, you might get 18%. Monthly payment, about $635. Total interest paid, over $13,000. Same car, same price, same timeline. One person pays $10,000 more just for having a lower score. That's not a penalty, that's a life tax. And here's the psychological part most people miss. When money is tight, decisions get worse. There's actual research on this. Studies from Princeton and Harvard show that financial stress reduces cognitive bandwidth, the same way sleep deprivation does. In simple terms, being broke makes you think worse. So when someone with a low credit score pays higher interest, that keeps them stressed, which makes it harder to plan, which increases the chances of future mistakes. That's not an accident. That's a feedback loop. This is why people feel stuck, not lazy, not irresponsible, stuck inside a system that quietly charges them more for everything. Here's what most people don't realize. Credit scores don't measure risk equally. They punish certain behaviors far more harshly than than others. Missing one payment can drop your score by 60 to 100 points, but carrying high-interest debt for years, as long as you pay on time, the system is fine with that. Think about how backwards that is. The system doesn't reward freedom, it rewards ongoing dependence. This is where credit utilization comes in. The amount of your available credit you're using. Use too much of it, even if you pay on time, and your score drops. Why? Because from a lender's perspective, someone who uses credit heavily, even responsibly, is closer to the edge. The score isn't saying, this person is bad. It's saying this person has fewer options, and options are everything. Let's talk about jobs for a second. In many countries and industries, employers check credit reports for certain roles, not because you'll steal money, but because financial stress is seen as a liability. So imagine this. You're trying to get out of a bad financial situation by getting a better job, but your financial history quietly disqualifies you. That's not motivation. That's a trap. Now you might be thinking, okay, Tanvir, so credit scores are unfair. What am I supposed to do about it? Good question, because here's the truth. You don't beat this system by ignoring it, and you don't win by obsessing over it either. You win by understanding what it actually responds to. Credit scores are boring, predictable, mechanical. They care about 5 things: payment history, credit utilization, length of credit history, credit mix, and new credit inquiries. That's it. No emotions, no context, no excuses. Once you accept that, the psychology shifts. You stop taking it personally. You stop feeling ashamed, and you start treating your credit like what it really is, a tool. Here's what most people get wrong. They wait until they need credit to care about their score. That's like trying to get fit after the emergency already happened. Credit needs to be built when you don't need it, so it's there when you do. That means boring, consistent behavior over time. One small card, low usage, automatic payments, no drama. Not because debt is good, but because access is power. And here's the uncomfortable part. Even if you hate debt, even if you pay cash for everything, even if you're disciplined, opting out entirely doesn't protect you. It limits you, because this system doesn't reward virtue. It rewards participation. That doesn't mean you should borrow money irresponsibly. It means you should keep the door open. This is where mindset matters. Stop seeing credit as money you're spending. See it as reputation. You're not borrowing, you're signaling, I can handle responsibility. And the better that signal, the cheaper life becomes. Lower insurance premiums, better loan terms, more housing options, less friction. And friction is expensive. Here's a simple action plan. If your credit is weak, focus on one thing first. Never miss a payment again. Not one. Set reminders. Automate minimums. Do whatever it takes. Payment history is the single biggest factor. Next, keep your utilization low. If your limit is $1,000, try not to carry more than $300. Not because you can't afford more, but because the algorithm likes restraint. If your limits are low, ask for increases, but don't increase spending. That alone can boost your score without changing behavior. Length of history matters too. Old accounts are valuable. Sometimes the smartest move is doing nothing. And finally, be patient. Credit improves slowly, but it collapses fast. That's frustrating, I know, but patience here pays off everywhere else. Let me leave you with this. A credit score isn't a judgment of your worth. It's not a reflection of your intelligence. It's a system that rewards predictability over potential. Once you see that clearly, you stop fighting it emotionally and start using it strategically. And when life stops charging you extra just for existing, that's when real progress finally feels possible. If this helped you see money a little clearer, hit subscribe, because the goal isn't just to make more money, it's to remove the invisible barriers that stop you from using it. And trust me, this was one of the biggest ones.